IT company Gijima has returned to profit. The group reported diluted headline earnings per share of just over 3 cents a share for the interim until December 2011. That's after a loss of 28 cents a year ago. No dividend was declared, and the resumption of payment of dividends will be reviewed by the board. Revenue increased by 7.5% to 1.33 billion rand. And of course, in studio we have got Irnest Kaplan. He's the managing director of Kaplan Equity Analysts. Thanks very much for your time. This is a turnaround story for Gijima. You've been singing the tune of Gijima for some time, saying it's worth the bet, and now perhaps you've indicated.
Yeah, look, it's quite funny. I actually have been singing the tune for a long time, and I'm actually disappointed today.
Are you disappointed today?
Yeah, I'm quite disappointed. The results were nowhere near what I was hoping for. And, you know, the company tried to explain today at the results presentation why the results weren't perhaps better, because I think that's what we were all
Did they present
for.
a stable picture? Because that's really
look,
what we're assuming.
I mean, overall,
stability.
The company is stable, and I think where the issue comes is that the level of profitability is not back to where it was prior to all the trouble that they had with the Who Am I Online project. So, you know, it's going to take some time, and I think the key question is how long will it take?
Well, we'll just look at the share price here at, 57 cents. We're up, all right, so this is marginal, and big moves, 3 2/3% higher. So the market celebrated the results.
Not really. I mean, the shares kind of hovered in the 50 to 60 bracket for some time, so I don't see today's move as a major sort of vote.
Groundbreaking.
No. I think, you know, the company's going to have to explain to us a little bit more than they did today. They didn't have enough time as to exactly how they're going to get to where they want to go.
Irnest, when you look, where's the growth going to come from? What are the plans, and what, in your opinion, went wrong? Why didn't they deliver on the plans that you expected this year? I mean,
look,
what are the growth plans? What businesses are
there?
there?
Look, I asked them a critical question today, and I said, why are the margins 5% where they were 10% a year or two ago, or say 2 years ago, before this Who Am I Online disaster? And you know, why has it sort of suddenly halved? And the sort of answers that I got were along the lines of that the revenue has come down, so they don't have that level of economies of scale anymore.
Because of fixed expenses.
Yeah. And I do buy that to a certain extent.
But you're not completely satisfied.
I'm not entirely happy, because the revenue hasn't been decimated. It's just come down a bit. And then the other comment was that they're busy changing their model within the company to a model that's more client focused instead of product focused. And that whole change, you know, is reorganizing a lot of divisions, etc. So that's costing a lot of money. You know, they didn't go into too much detail on that, but you know, let's give them credit. I'm going to unpack it more. We need to chat to them more. I'm just
Have you made a decision on buy, sell?
No.
Wait and see?
No, I'm going to just wait and do more numbers.
We'll wait until we get those numbers from you. Well, technology group Digicor is out with interim numbers today, and the first half revenue is up by 24% to 401 million rand. The company concentrated on fleet management and resource management. Digicor is another one that you analyze.
It's one that I've actually in the past noted that this is potentially a big turnaround story. The share used to be 10 rand in its heyday, dropped all the way down to 3 or 250, and it's now hovering around that level. You know, if that business can get their sales back on track, then the profits are going to grow exponentially, and the share price will grow exponentially
this
too.
Is a fairly stable business. The customer base should be fairly stable.
The problem that I have with Digicor, and it came through again today, is that the sales is coming back. The revenue is growing, but the profits aren't. They're kind of static. And the company has changed their model of the way they sell the equipment. Instead of selling up front, they're selling it on a subscription model. So they're getting the income in over a longer period. So you could argue they're investing in the future profitability. But, you know, it really is one that one needs to dig further, and I'm not happy with it either.
You had a frustrating day with
Yeah,
Gijima, with Digicor.
It's been
Morvest yesterday.
Yeah.
Tell us a little bit about what you saw on that front.
You know, at least it was okay. I mean, you know, for the first time, actually, probably the second time, in recent times. They've had a fairly clean result, not great growth. I think organically was about 1%, so it was flat. Had a little acquisition in there. And, you know, earnings of nearly 5 cents, share price of in the early 20s. So, you know, this is a very cheap stock.
25 cents is up 4% today.
Well, it can only go up 4 or down 4 because that's a 1 cent move.
It is, absolutely. But,
but
could
I
this
think
be the 10 bagger of the future?
I definitely think maybe not a 10 bagger with conviction, but certainly a 3 or 4 bagger if they can just continue doing what they're doing the last 6 months in the next 2 years.
3 or 4 bagger, not a bad option in today's market.
Bronwyn, you learn something new every day of your life, no matter how old you are. I've never heard of this company before, so I certainly can't comment on it.
It used to be called Semeka.
Educate him. Semeka.
Okay.
And it's changed its name to Morvest. It's a diversified ICT group.
Okay.
Yeah.
All right. Are you with us now?
I'm a little bit with the program
all right,
now.
good. Well, let's go to Telkom. And news flow on this front. Obviously, we're sitting at levels that the value-based investors should be running into. I don't even know what terminology to use, but they're not. At this stage, people are really still wait and see on Telkom.
Yeah, I think it's the right approach, Bronwyn, because, you know, there is value in Telkom provided that management do what they should do and do it well. Then, you know, then the thing's very cheap. But, you know, if certain things go against them and if certain things don't go the way they're hoping it to go, you know, it's certainly not a value stock. It potentially could be a value trap.
Ernest, the share price is not going the right way.
No.
We're just above 26 Rand on Telkom now. In fact, Lelo was saying earlier that they had bought in at 33, thinking it was the right time to buy into Telkom, and it just disappointed. They sold out at 31.
I think there's too many unknowns over here. The first is the whole mobile venture which they entered into and spending a lot of money on. We need to see how successful that is. The second thing is this whole thing with the tie-up with KT Corp, the Koreans, and see what that brings to the party. You know, they've got a new financial director or CFO. There's this whole speculation of the size of the fine they may have to pay, you know, as an outcome of the Competition Commission hearings. You know, we don't know the quantum of that fine, and it's still up for debate. So I think there's so many unknowns at Telkom that I would be prepared to say it's got a lot of good things in it. But for now, there's too many unknowns. Just stay away for a bit.
Yeah, look, I mean, Telkom, the essential problem is they're in a declining industry. And it is hell of a hard to manage an industry well in a declining. And yeah, I'm just talking voice. Voice fixed line is declining and has been for many years and will be for many, many years to come. That's just, mobile just took over. I mean, that's just
and talking about mobile, very quickly, you've got time for a comment on Vodacom from your perspective.
Yeah, I mean, incredible. They just keep on doing well. The share price is loved by everybody. Well, the share is loved by everybody. The share price keeps on going up.
Do you love the share price?
You know, I've always said Vodacom's not a big growth company, and so therefore I wouldn't invest in the shares. And that was at 60 Rand odd. It's now over 100. So I've clearly been wrong, but you know, I think they have got I still stick to what I said. They've got limited growth potential from here.
Irnest, thanks very much for your time. Irnest Kaplan, the Managing Director at Kaplan Equity Analysts.